The strength of a nation's economy is fundamental to the performance and attractiveness of its capital market. That's certainly a truism. I now invite the Governor of the Central Bank of Sri Lanka, Dr. P. Nandalal Veerasinghe, to present his insights on the economic outlook.
Good morning, Honorable Minister of Labour and Deputy Minister of Finance and Development, Honorable Professor Anil Fernando, High Commissioner, and also Professor Disa Bandara, Chief of SCC, and also Colombo Stock Exchange, the chairperson, and all the other important senior management, as well as the participants. And thank you for attending a group full attendance. Quite interesting to see that. So I think in my remarks, it's easier for me to make because it's a lot of things were discussed. But I will try to tell you a story more than the numbers. I think that's just about 10-15 minutes I can finish, so giving more time for the discussion is the most important part of the story. I can remind you, I think when I was here in 2023, the last time, for a small gathering organized by our Australian conference here, I can see those are still here. This was a difficult time in 2023. At that time, the story I was telling, if those who were present there believed and invested, they would have much richer now, if they believed that story at that time. Now I am telling you the story outlook for the future, and if you still believe that's going to be realized, showing the credibility of story is now already realized. This, I think, is an opportunity for anyone to invest in Sri Lanka. So with that, I think let me just give you a brief presentation on what I'm going to talk about. Mainly, I think these are numbers I don't know talk too much. We know we went into a deep economic crisis in 2022, where the inflation went to 70%, GDP growth negative, almost 8% contraction, transit credit contracted, the exchange rate depreciated to 370 official, unofficial 400 rupees a dollar, compared now 300 rupees. Government revenue plumbed to 8.2% of GDP, compared now 15%. And fiscal balances, you can see almost close to 12% fiscal deficits, now coming to less than half of that. So this is a story of the recovery, broadly, the snapshot. And then just to elaborate a little bit, the growth story. I think this is the story where we can see the resilience of Sri Lankan economy. If you look at any country which has gone through this kind of a deep economic crisis, and the recovery path is relatively faster, even compared to similar countries that went into one is a sovereign debt crisis, secondly, balance of payment crisis. Historically, the worst economic crisis we experienced in Sri Lanka in 2022. From that point onwards, and not only the economic crisis, but during the last 3 years, we all know the political uncertainty, instability, social unrest. With all these things, where this shows the recovery path, a resilience of the Sri Lankan economy going forward. Now we have much more stable political environment, a strong long-term mandate for the current government. I think it's now much easier path going forward to me. I think if past was, the last couple of years were tough, difficult, but still we were able to recover. And going forward, I think recovery should be much easier. That's why I think outlook, when you look at the recovery from second half of 2023 up to now, a steady growth of last year 5%, this year will be close to 5%. And if you look at the baseline scenario, the IMF predicted for us to restore the sustainability, we needed minimum 3% growth. So we have overperformed in terms of growth so far. I'm sure going forward, the way the potential is well above the 3%. We basically, which means economy will recover faster, and this sustainability will reach the targets much earlier, as Professor mentioned already, than the baseline of the IMF projections based on the debt sustainability. So this is a growth story. And then when you look at the key economic indicators, you can see that 2022, 2023, 2024 and 2025, the steady recovery every year in terms of industrial production, the manufacturing, construction and business activity. All are shifting upwards steadily in the last 3 years. That's evidence of, these are forward-looking indicators as well. There's across the broad recovery is evident on the basis of historical data as well as forward-looking indicators. Now, on the central bank, I think I should be talking more about the monetary policy. We are the authority to implement monetary policy in Sri Lanka as a central bank. Now, as you all know, after the crisis, in 2023, the Parliament enacted a new Central Banking Act, which gave the central bank the necessary independence as a regulator and the implementation of monetary policy for the country, as well as financial stability. So, new act gave us independence as well as accountability for us to meet our mandate of price stability. Under the new monetary policy framework, what we call flexible inflation targeting regime, now embedded into the mandate, and also exchange rate flexibility under the same mandate. And we have a very clear inflation target. This is the most important one. Why inflation should be maintained low and stable is the baseline and core for the stability of any economy. You can see here the Singapore, any other country, stable economy, stable inflation means stable interest rates, stable exchange rate. That's the ensure of the stability. If you want a stable predictability, the bottom line is to ability to maintain inflation low and stable. Since the 70% inflation hit to the crisis in 2022 September, we were able to bring it down to zero within 12 months. Within 1 year period, it was brought down to zero. I show you the next chart. This is the inflation story that our responsibility. You can see since then, from 70% came down to zero in 12 months. Since then, we have been able to maintain very stable inflation. In fact, there were certain periods of deflation as a result of sharp adjustment in electricity prices, with the improvement in the energy sector. There are some more improvements we can expect. We are gradually coming back to our target from the deflation. It's not a concern because as long as economy is growing at a healthy rate, deflation is not a concern. It's a temporary period of deflation. It's good, especially after the spike in inflation and very high price levels is experienced in the country in 2022. So then we are maintaining stability, and we can assure you the stable inflation through prudent monetary policy in place is the bottom line and the base for the stability of the country. So this going forward-looking, as I said, is a 5% inflation. Then we can see we publish in a much more transparent manner our inflation projections. Going forward, we'll maintain our target. Can even consider bringing it down with the mandate of the government. Now, current target is 5%, which is appropriate for a country like us, which can maintain relative stability in the interest rates, relative stability in the exchange rate. So, in our monetary policy framework, you can see the interest rate path. Central bank instrument is the interest rates as a policy instrument that we use that to maintain inflation at a targeted level. So this is where we can see we have been relaxing monetary policy from policy rates was 15-16%, now around below 8%. And with that, you can see the market rates on left-hand chart. At some point, there were interest rates well above 30% when inflation was running at 70%. This was necessary at that time to curtail the demand and manage the currency as well. Now you see very stable interest rate environment for the government, for the public, for the businesses, and in line with the monetary policy stance, interest rates have our policy has been transmitted into market rates quite nicely, and also as a result, you can see the recovery in the growth. People talk about recovery in tourism or some sectors, but if you look at the sectorial growth, it's a much broad-based growth story in Sri Lanka. It's agriculture, industry services, and everything. It's a broad-based recovery. All the sectors are now recovering as a result of the monetary policy and low interest environment. It's not sector specific, it's a broad recovery that we are seeing. Even going forward, what can see is it will continue for next few years. And how the monetary policy has facilitated the other investment, especially credit, going from the banking sector to the private sector. You can see the crisis period, there was a huge contraction in credit to the private sector with very high interest rates. Now we get steady recovery of private sector credit on the left-hand chart, which shows even last month, 200 billion credit disbursed by our banking sector is one of the highest months that we are seeing steady recovery, which means now there's a crowding in of private sector credit into the economy, which is supporting the economic recovery. And to facilitate that, on the right-hand side chart, I want to show this is credit to state-owned business enterprises, state-owned enterprises like the CPC, CB, and other state enterprises. Historically, one of the reasons for the crisis is that these enterprises were making huge losses, and they have been borrowing from the banking sector and local resources, finances available. As a result, there was a crowding out for the private sector investment. You can see before 2022, these state enterprises have been borrowing heavily from the banking sector. It was a big business for the banks, but it was not good for the private sector because the resources available to the private sector were absorbed by the government loss-making enterprises. Now, with the new policy of important reform that was implemented during the IMF program was the cost recovery pricing for state-owned enterprises, utilities. As a result, you can see that those enterprises now paying back their huge debt that were accumulated during several years with the bank sector. Now they are paying back. As a result, there's a crowding in impact for the private sector. That's why credit is growing fast, but that is not a concern because overall credit is stable because state-owned enterprises are paying back because of the cost recovery pricing. It's an important policy, important reform that was implemented in the recent past, last 2 years. As a result, now there's a lot of opportunities for the private sector to grow. That's why we see reflection in the stock exchange, also part of that growing credit and financial intermediation to the banking sector. And other important part that led to crisis, you can see that before 2022, under the Central Bank Act, there's a lot of monetary financing of the budget deficits. Not only government was running large budget deficits of close to 12%, couple of years, and no 12%, half of that was financed by central bank directly, monetary finance. You can see the right-hand chart how the build-up of central bank financing to the government came to peak. And since 2022, we have been able to curtail and stop the monetary financing, and then can see other side, the central bank holdings of government securities now stable and coming down, which means that is one of the reasons why there's a lot of credit available for the government and to the private sector to grow going forward. This will be the future as well, because under the new monetary policy, new central banking act, there cannot be any monetary financing that assures a stable inflation going forward. That's assurance of inflation remains stable, and currency and interest rates will remain stable under this policy. And one of the important factors here I want to highlight, a lot of people talk about the foreign exchange earnings. This is important chart on the left-hand side is the red line, is important one, is the country's external current account balance, which is country's foreign exchange earnings versus expenditure. If you look at historically, after 77, when the country was open for liberalized for the trade sector, since then, current account, country has been earning less foreign exchange earnings than we have been spending more than earning. Current account has always been a deficit below zero line up to 2022. The last 2 years, it has been this is the third consecutive year we are going to record the current account surplus, which means foreign exchange earnings are going to be higher than what we spend in terms of imports and other expenditure. It's a steady third year. The part of the reason you can see the fiscal policy, other blue chart, that is important point I have to make here, with the fiscal consolidation and fiscal discipline. That certainly helped. Historically, if you look at the close correlation between what we call the twin deficit story, large fiscal deficits is the one that drives large current account deficits of the balance of payment. That's a very close correlation. When you look at the transformation, when the fiscal policy moving into fiscal consolidation and less fiscal deficits, will certainly transform into a more stable current account surpluses or stable current account deficits. That is the important part. That's where going forward, as Minister mentioned, as long as the government maintains fiscal discipline, lower deficits and primary surpluses, then that will automatically ensure the current account, stable current account position, which means the stable currency going forward. What is important, the message here, as long as government runs fiscal discipline, we'll see a stable currency, we'll see a stable current account surpluses, we'll see a stable macroeconomic situation. We have seen last 3 years is not because of the restriction on imports. It's because of the transformation of macro policy management through fiscal policy, transforming into a broader current account of the external balance of payment and reserves. This is where basically the sources of this current account surpluses, partly the exports are doing relatively stable, and then obviously remittances is a large source of foreign exchange earnings, plus the tourism is also doing extremely well. Those three sources together now generating a stable current account and stable currency. And as a result, you can see the build-up of official reserves. And at the crisis, it was close to 1.9 billion with Chinese PBOC stock of 1.5 billion. Available liquid reserves, usable reserves were only 25 million when I took over in 2022 April as a governor. And since then, we went into a strong reform program and were able to manage to build up resources from that lowest point to now over 6 billion. End of this year, certainly will be built more than over 7 billion, and next year will be the highest level of external resource that we are going to have in this country, especially with stable resource. Earlier we were building up resource, coming to the market and raising more external borrowings, whereas this time our resource build-up are organic ways of through current account surpluses. That's why you see central bank interventions in the market on the right-hand chart, is this build-up of reserves not out of external borrowings of the government. This is out of foreign currency surpluses in the market through remittances, exports, and this tourism. That's why we have been able to build more stable resource, which is much more stable than the resource we had earlier. Maximum was 8 billion, sometime back in 19 or 2019, but still that was large part was borrowed money by the government, but this time it's much more stable foreign exchange earnings. That's the stability difference of this resource versus earlier resource. And this reflects also this important one for the investors. Predictability of the stability of the exchange rate is fundamental. You can see the crisis period, official rate went to 365, 70, and we all know black market rates over 400. Now it's much stable, 300 rupees, and very predictable and stable currency. That's the foundation for the stability for the businesses and any investors. You can see last 23-24 Sri Lankan currency was one of the best performing currencies. This year some small depreciation, but it's a path is quite clear and quite stable. We can see that exchange rate management and the foreign exchange earnings are much more comfortable now. Obviously, we have to build more. And here, fiscal policy, I'm not going to talk a lot about because the professor already talked about. But I see here, important part is historically, there was a lack of fiscal credibility in the fiscal policy in Sri Lanka. If you can remember, people who are familiar with Sri Lankan story, every year, finance minister goes to the parliament, announce a budget with revenue target, expenditure target, the fiscal deficit and debt target. It's all the time. Targets were underperformed. Revenue target, if announced, say, 10%, achievement was 8% of GDP. Every year since 1977, I think. The difference now is that what was the target announced, and it's overperformance. That's what the professor just mentioned, finance minister. I think That's a cornerstone of this stability going forward. So that's, I don't want to talk too much about the government expenditure. Also, good part of revenue collection of overperformance revenue is that government ability to spend that money for productive investment, public investment. A lot of space for the government to spend money and how back that tax expenditure to areas that they want to make investment margin productive and invest in areas that is necessary, priority areas. There's government space and buffers being created. So there's a lot of flexibility in fiscal policy now compared to last. Just to talk a little bit about the IMF program that we, and I'm one of the persons who were involved right from the beginning, starting from the negotiation of the debt and the negotiation of the program with the IMF in 2022, from 2022. There are 5 key pillars. This is the foundation of the program that we agreed with the IMF to get the support from the multilateral agencies like IMF, World Bank, and ADB. So first pillar is obviously revenue-based fiscal consolidation and structural reforms. Those are very well, in fact, implemented so far, very successful path here, as already talked about. And in terms of structural reforms, public financial management and public debt management office, those are key reforms. Those are already implemented. And the protect of poor, social safety net is other important one. The crisis, poor people are the most affected. So that's so it's important to protect the poor, and social safety net is social stability is a cornerstone. That's the first pillar. Second pillar is to restore public debt sustainability. I talk about a little bit. Where the debt restructuring. This was a sovereign debt crisis. Without restructuring of sovereign debt, there was no way out. When you look at the countries went into sovereign debt crisis, I think we were able to come out within 2 years. And that was a successful story. Even with the unstable political environment, this is the third government I am working, but still the political stability was not there for a longer period. Now, with all these challenges, we were able to restore public sustainability, and debt targets will be achieved much earlier than what we thought. And third pillar is monetary policy and financial systems external resource that we have already talked about it. And fourth pillar, let me talk a little bit about the safeguard financial system stability. That's one of the central bank responsibilities. During the crisis period, I know Sri Lankan banks, a lot of concerns that banking sector, there would be a banking crisis as well on top of sovereign debt crisis and the balance of payment crisis. If we had a banking crisis, that would have been the end of the story. People would have lost all their deposits and savings. But with prudent regulations and managing the banking sector, we were able to protect. We didn't have a single bank failing during the difficult period. Interest rates went to 30%. And exchange rate depreciated by 45%, but still we were able to hold and maintain banking sector. I see a lot of bankers here. The time was tough, but that was the prudent financial stability policies where we were able to protect the depositors, protect the banking system. Now banking system are well placed, well capitalized, well liquid, both foreign exchange and rupees, and now supporting the recovery of the economy. That's important one. Then fifth pillar is important one. Otherwise, Sri Lanka has the credibility of corruption vulnerabilities. That's where this government has strong mandate. This came into power with this strong mandate. The government is strongly committed, as already the Professor mentioned, this address corruption vulnerabilities. This is Asia's first report on the addressing corruption vulnerabilities done by the IMF, independent report already published, and there are certain lot of recommendations. Those are very seriously now pursued by the government to implement all this. Third path is the next path of reform, growth path. Now stability is there. Now stability should be maintained. That is the foundation for the growth, and growth, that's where the professor talk about areas for the growth in going forward. And there are a lot of other reforms should be taking place. So on the side, public debt restructuring, we have achieved all the debt restructuring elements already completed within 2 years. Small last mile is the Sri Lankan airline restructuring a small amount. That also government is working hard to complete that part. Once that is done, this is where area I think our rating still, sovereign rating is still from default to CCC+. But what's preventing our rating going forward is the small Sri Lankan airline restructuring is left still. I'm sure government is working seriously to complete that. I think that once that is done, we are now all set for next level of rating upgrade to B level. This is where I think what I see, sorry I'm telling today, if you wait until ratings go up to B level, you may be too late. If you come now, this is a time. This is a time. Because that's what, sorry, I told when we were in the default category, I was saying 2023. Don't look at the current situation. Believe the story that I was telling. If you took the innocent decision at that time, you would be much better. Even now, still there's a potential for sovereign rating to go up pretty soon. As that goes up, you can see the market reaction, and this is the time for you to take the advantage of that. So this final slide, I think economic crisis, very well managed, debt restructuring almost completed, price stability, zero inflation, key reforms for the stability, all financial systems are done. There are strong buffers in terms of external buffers, in terms of reserves, monetary policy buffers, in terms of interest rates, 5% interest, 8% policy rate means there's still space for us to use if there's anything. And fiscal buffers. Compared to fiscal, government running a 1 trillion deficit with the state banks, now running a 1 trillion surplus, rupee surplus with the state bank. Those are key buffers. Monetary policy buffers are there, external buffers are there, and also the monetary policy buffers are there. And reforms are ongoing. State-owned enterprise reforms, Professor Min talked about. IMF program on track for another 2 years, which will ensure the completion of extended fund facility program with all the reforms successfully implemented. So these are the way out. I think with that, I'm sure the panel would be much more important for us to clarify anything. With that, let me stop it. Thank you very much.